YouTubers, man, do I have a doozy from you. It's from last week, though. It's from October 6th. It was sent to me on my YouTube channel. It's a really good one. It's a really, really good article. Mortgage carrying costs to rise 8% for new buyers next year, Scotiabank says. Well, think of it like this. Because of the restrictions of outflow of money coming from China, it's going to be hard to maintain the housing market to give potential gains to the government, property taxes, and all that stuff, and the banking to make money. So it's going to be really tough because of the lack of money coming in from Canada. They need to basically raise the rates to a point where the working poor has to kind of carry the slack. Remember what I said, that the working poor is going to end up paying for this housing crisis? It's true. They are going to end up paying, and pensioners and all the people are going to end up paying for this housing crisis, because the people that caused the housing crisis will be long gone by then. Anyways, new buyers can expect homeownership to become even less affordable next year as mortgage costs rise, while current owners will be largely insulted from higher rates. So like I said, people, if you're in a variable rate mortgage, make sure you get something closed right now. I am not a financial consultant or any of that crap, but I could just tell you, I would speak to your bank and maybe renegotiate terms. Okay, so let's continue here. That's one of the main takeaways from the outlook from Scotiabank, which forecasts mortgage carrying costs to increase by about 8% next year because of the increases and tougher mortgage rules. I don't think it's the increases in tougher mortgage rules. I think if there was no, if the government of China did not stop the money, the wealth from leaving the country, I think they would have never changed the mortgage rules here. I think they would have been the same. Interest rates are about to go up. No, for real this time. Banks follow suit as Bank of Canada hike rise. So let's keep going. That's almost 3 times more than 2.5% the bank expects household incomes to rise. More expensive mortgages coupled with less income to pay for them is a bad combination for new buyers, which is why the bank sees affordability getting further out of reach next year. And you're going to see something else, guys. The people that the Canadian proper that own and want to sell to upgrade, or just want to sell and get out, they can't, because the other Canadian proper can't afford to buy. And the investors are not bringing money over anymore because of the tight restrictions on the outflow leaving China. So this is a disaster. So that's what I have to say. The same can't be said, however, for those who've already bought, since most of them are largely insulted from the raising mortgage rates. Except anger and Steph Pelosi takes away the punch bowl. So the party's over, people. Let me continue here. Sorry, it's hard to read this. About a third of all Canadian households fall under the latter camp, and all their standard 5-year fixed mortgages should offer them some protection now that the bank can seem to have entered into rate rising cycle. As a result, rising borrowers could feed through only gradually to mortgage holders, and the bank said. In fact, the majority of borrowers who are set to renew their mortgages in the next little while will likely do so at a rate comparable or to even higher or lower than the one originally signed up for. There could be more bad news in the horizon for buyers too. Further rule changes, including more stringent stress tests for uninsured mortgages, are expected to be unveiled later this year and would exert additional drag on the buyers, and the bank added. So, this is right here. A majority of fixed-rate mortgages coming due in the new term over the interest rates comparable to lower than those originally got, Scotiabank says. So, like, a lot of them coming up to an end. At the end of 17 going into 18. RBC says rates will hurt. Of course hikes are going to hurt. Toronto, Vancouver housing is still out of reach for many. So, people, sorry about this. I just woke up. I'm still sick. So this is a really bad mixed cocktail. I don't think the Canadian housing market was expecting that the Chinese wealth, because there was a huge runoff in China, and a majority of China's wealth was leaving. A majority of it went to Australia. and New Zealand. It's obviously closer to China, right? But quite a bit of it did come to Canada. Now what's happening is when the Canadian proper, and when I say Canadian proper, I'm talking about people that pay their taxes, people that don't own multi-million-dollar mansions and are collecting welfare and child's taxes, child support, the child's benefits, whatever, and have multi-million dollars in other countries. No, I'm not talking about those people. I'm talking about people that pay their taxes, send their kids through school, go to church on Sundays, go to whatever, mosque and temples, whatever. I'm talking about the people that took Canada and made it their home. I'm talking about people who love this country. You know what I'm saying? So those are the people who are going to suffer big time, because when they have to upgrade to another house, they can't sell. Houses going forward, I think, are going to be changing hands only. Like this. Someone has a house to sell, somebody wants a house to buy, they have to sell theirs, and the other person has to sell theirs and switch homes. The other person that's looking to buy will never get into the market now. You're closed out. Would there be a crash? There's going to be I think it's going to be a multi-level crash. What's going to happen is the houses that weren't purchased, the houses that were purchased by the Canadian proper, and I'm saying like people that work 2-3 jobs just to put food on the table and just to get by and to live, those people are the ones that are going to have a mini crash. And the investors are going to continue just to hold, while if more investors can come in to buy up those other properties to make up the difference. I see Vancouver, Sydney, Melbourne. These cities should have crashed a long time ago. Long time ago. I think Australia hasn't had a crash in 26 years. So what I'm trying to say is I think the only way this would work properly, there's just no, like, I think those cities are just going to be, what do you call it? A place for the rich. Not famous. No, not famous at all. Rich. Just the rich. It's going to be cities for the rich, and basically that's just how it's going to be put. I mean, homelessness is going to go through the roof. Cost of living is going to continue to skyrocket, and it's sad. I'm really saddened to see like how Canada is basically sold out, and it's true. I wish I was making this up and lying to you guys, but I'm not. It's just plain as day. And a lot of people are gonna have a really big rude awakening in the next 5 to 10 years when they realize that they can't never ever own anything in this country. So I don't know. Let me know what you guys think. Comment below. Your comments are much appreciated. Thanks for watching.